Olá a todos, sejam bem-vindos a mais um episódio do Geopolítica, Próxima Jogada. No episódio de hoje eu estou aqui com meu amigo Jacob Wedin, sueco, mas cidadão do mundo, que já fez muitos trabalhos interessantes na América Latina, morou em São Paulo, morou na Colômbia, viajou 75 milhões de vezes para o México e para vários outros países na região. E o mais interessante, ele é um especialista em como funciona o acesso bancário para aqueles que não têm um histórico de acesso bancário ou são chamados de underserved nos Estados Unidos, aqueles que sempre tiveram dificuldade em se relacionar, seja por falta de documentos, pelo seu histórico, pela ausência de crédito, com o sistema bancário. E aí ele vai trazer para nós um pouco sobre a experiência dele trabalhando com startups, fintechs e mecanismos de inclusão financeira, que no fim acabam não só beneficiando essas pessoas, mas principalmente beneficiando também todo o ecossistema de um desenvolvimento financeiro, econômico e social sustentável em vários países. Sejam muito bem-vindos ao episódio de hoje. Para vocês que estão assistindo pela primeira vez, muito obrigado. Se gostarem do canal, deixem seus comentários, críticas, sugestões com educação, se inscrevam no canal e para vocês que estão visitando novamente, muito obrigado pela participação de vocês. Well, Jacob, it's a pleasure to have you here, my friend.
Always a pleasure to see you.
It is a long time that your trip to DC was due. I understand that you're living in Texas right now, but basically you spend most of the time in the airplane flying everywhere. In order for our viewers to learn a little bit about you and to understand what you do, I would like you to give a brief introduction of your career, beginning in Sweden, but also focusing on your activities in Latin America.
Okay, thank you. It's great to see you again. It's great to be here in DC for finally.
Yes.
So I have a background in the financial service area, and I'm American investment bank in London, in Spain. Eventually I moved to Brazil, where I was the Swedish Trade Commissioner, covering some 11 countries, including Brazil, Colombia, some Caribbean nations, promoting Swedish companies and interests in those markets.
That's where when we met, working with several Swedish industries.
That's when we met, and it was a very interesting time. It was during the time of Lula in Brazil, and there was a lot of foreign direct investments into Brazil and the region taking place. So that was a great start on my journey in Latin America.
So you were in Brazil during the beginning of the Lula year. You left after that.
I left.
So you never actually followed closely the car wash scandal from distance. Yeah.
No, that I looked from. I was looking from the north. I was working for a consumer finance company building financial services for the underserved in Colombia. So at that time I was already in Colombia. I did open the Swedish Trade Council business in Colombia, in Bogota, Colombia as well. So after a couple of years in Brazil, I moved to Colombia, started providing consumer loans for the underserved. The underserved being the people that don't have access to traditional banking services.
So basically are people that they are part of the economic ecosystem, but in an informal way.
They are usually informal. They can have a bank account, but maybe they don't have access to this full service.
The credit,
it can be for several reasons. They can either be excluded because they don't, they're scared of the banks. They just don't feel comfortable. They might not have all the documentation to ask for a credit at the bank. They don't like the way they're approached, or the banks are not that interested in lending them $150, which is, typically what a customer like that could need, or even $1,000. The banks in general, and I'm speaking in very generic terms here, the banks in the region in Latin America tend to focus so much more on the higher socioeconomic levels.
Yes.
They want to minimize the risk. The margins are still good. it's not that competitive for them. I mean, you know, the profitability of some of the Brazilian banks is just unbelievably strong, and it just shows that, you know, competition isn't strong enough. It is changing today. Obviously, the fintech revolution or evolution is changing that to a certain extent. I think we're at an earlier stage in that than people actually understand right now.
And do you believe that this, I think it's a good point that you brought up, this fintech revolution, do you think that not only in Brazil, but in other South American countries, is it aimed primarily at the underserved, or no, it's in general?
If you ask their institutional relationship person at the specific initiatives, they would say yes. Do I believe that there's been progress made in financial inclusion because of these companies? Very little. You know, right now, what we're seeing, I mean, COVID kind of fast forwarded and forced us into digital, you know, adoption quicker than we would have without COVID. I don't think that there's a lot of financial inclusion that's taking place. I don't think that the financial inclusion has been advanced at the speed it should, because there's so much low-hanging fruit for these companies. These companies that have, you know, to a certain extent, superior technology to the traditional financial system. You know, they're more user-friendly, they're digital only.
And it requires access to smartphones, which of course, it's in countries like Brazil is spread nationwide. But there are several other countries in Latin America which is not the case.
But you got to remember also that the people I'm talking about, the underserved, they spend a significantly higher proportion of their income in paying for good internet access, and many people can't afford it. So, you know, there's still a lot of work to do there.
Yes.
I mean, just because you can go on Facebook and do something doesn't mean you can bank.
Exactly.
And it's also a financial education part. You know, it took, I think everybody has their own story about how long it took them to get comfortable with, you know, banking on internet, even though it's a long way back. But you gotta remember, some of these people, you know, they really struggle. They live day to day. You know, you talk about paycheck to paycheck here in the US, in Brazil, and as you know, in Colombia and Mexico, there's a large proportion that lives day to day.
Yes.
And
Latin America mainly,
being financially excluded is just, you know, making them extremely vulnerable to any, you know, special event, accident, or something happen where they need a little bit of money to get over that problem. They just don't have it, and they can easily get into a downward spiral. And there's so many aspects that's problematic. It's actually a problematic, a problem for democratic development in some of these countries.
It is, and it's a very interesting point, because one of the things that I talk a lot here in the US in the presentations I make is that the notion of democracy in Latin American countries is very different than the notion of democracy in Europe or the US. While in Europe and the US is very linked with values, in Latin America is linked with inclusion. Because if you're not included, democracy is simply a bureaucratic process. So what makes an underserved citizen feel like a citizen is his ability to be part of the economic machinery. And that leads me to my next question. We've been to Brazil together many times since I moved here, and you've been in and out of Latin America for the past, 15 years?
Yeah, 15 years.
From the beginning until today, where do you see the biggest development in terms of more inclusion of the underserved and better access to simpler financial systems?
I think there's, you know, obviously technology enables us to serve these customers if we want to, or if and there is an access to capital now. You know, the steady, dramatically increasingly stream of venture capital coming into Latin America today. I mean, you can't open Financial Times without seeing yet another 100 million round for a fintech going into Latin America today.
Yes.
You know, you need skill set. The skill to manage the business and run it is there. It's in Mexico City, it's in Sao Paulo, it's in Bogota, or wherever you want to find it. You know, you just got to know how to manage. the capital, the foreign direct investment that you need, or the local raised funds is there, and the technology. Now you need to put it together. There's one thing also, is that the regulation, and from a regulatory perspective, both Brazil and Mexico have had changes, and they're trying to support the fintechs. There's still a long way to go.
Yes.
I think my view is that you need an ongoing dialogue between the business community, or in this case the fintech community, and the regulator, that keeps on reviewing. Do we have the right perimeters that will make sure that the companies are protected and the consumers are protected? And because that goes hand in hand. If you get that wrong, there's regulation in Latin America and certain markets that is driving exclusion. They don't allow you to operate so you in a sustainable way can service these segments. And that is a very, that is something that needs to change.
And is that something that you see mostly in the Central American countries or in the Andean region?
Luckily enough, my three favorite places, Brazil, Colombia, and Mexico, I don't see that. I think it's friendly towards, these initiatives.
Yeah.
There's always a lot of room for improvements. There's a learning. How do we regulate crypto? We don't know. Do we regulate crypto? What effects do that have? That's not for the conversation of the underserved, because it's not yet something that ends up on that in that segment. I think that there's a definite need for a structured and constructive dialogue between regulators and what I would say call operators of the businesses. I think we're still such an early phase and in this. So a lot of the companies are actually, instead of bringing people from the underserved, which are underbanked or unbanked, don't even have an account.
Yeah.
They're actually, a lot of the companies want to do that, but they don't have to. They can still steal customers from the traditional banks, because the banks has been...
And the effort is much bigger to not only attract the underserved, but at the same time educate the underserved about how to use their services.
Yeah, the best way to look at it is to say, hey, to the neobanks or challenger banks, or what I say, how many of the customers or the new customers that you have didn't have a bank account? They will know that.
Yes.
And I don't think they will tell you, but it's almost everybody. So that means they're not bringing yet. As competition stiffens up, as banks get more modern and so on, the regulation becomes more interesting for them. I think the big revolution is going to happen when you start seeing people, because of technology coming in. The technology is there.
Yes.
We don't need to, we always need to invent, but we have enough. We can capture data in a smart way from people we couldn't reach before. People in the countryside in Brazil, if they give us access to their mobile phone, we can figure out how to serve them financially.
And I think it's very important that you bring up the aspect of technology and how technology powers the accessibility to financial institutions. And this leads me to my next question, which is, we have seen over the past 3 years, let's say, an intense dispute between the US and China in several areas, in political, commercial, geopolitical, military, but I wouldn't say mainly, but in a very special area, which is technology. And at the same time, Latin America is a region of dispute in terms of influence. When you look at the growth of fintechs, of startups in places, as you said, Bogotá, Medellín, Guadalajara, Montevideo, São Paulo, and those places are attracting Chinese investment for softwares, and even for supporting the many of those startups. How do you see that this could eventually attract the American companies to counterbalance, or even for American companies to treat this as a risk?
So I don't see a lot of American companies pushing I want to expand outside the US and go down to Latin America, with a few exceptions. I don't see that yet.
Yeah.
I think that they're, unfortunately, a little bit fat and happy here up in the US with development still going well. That hopefully will change. What I do see is as I mentioned before, a very dramatically increasing in capital from the US going down there and acquiring, investing into. The golden child of fintech in Latin America is Nubank, and they have some pretty strong, well-known names on the shareholder list right now. So
Absolutely,
that is one way of doing it. I haven't seen any major US fintech that's decided I'm going to start up in Mexico. There's rumors about some of them going down there. I think they will, in search of growth and yield.
And the Chinese, they're already looking at that as an opportunity. So perhaps the US is delayed in terms of that.
Yeah. I think also, touching on the political subject and going back to the regulatory side, I think one thing that's important to understand, there's very few political incentives of trying not to facilitate financial inclusion, because it's votes. So if you get access to financial services or credit or so, you are going to feel that you're, as you mentioned, bigger part of society, and you're going to give in your term some positive, or maybe credit or vote in that direction.
Yes.
So when you speak to regulators or the politicians behind the regulators, sometimes they're always very positive. They understand that the more people I can get into the financial system, the more votes there's going to be here. So
yes, and at the same time that it's an opportunity for some of those politicians, is also a risk for other sort of politicians as well.
Yeah.
Jacob, you talk a lot with investors here in the US, with investors in Europe, and they ask you a lot about the financial system in Colombia, Brazil mainly, Mexico a lot, and how first they understand that the underserved, that the bankly underserved, they present a great opportunity. Second, they understand that there is a lot of room to grow in those countries, but potentially they don't understand the risks. They might see the opportunity, but not the risks. How do you explain those investors how to manage the risks?
So, I always, first of all, I start, I ask them, like, do you want to be a bank? Because if you want to be a bank, you're getting yourself into a whole different problem. I think that when I speak to them, I try to explain to them, first of all, when they come from the US or Europe, they have to really immerse themselves in who is the customer. How does his day look like? When I speak to some Swedish friends and they say, well, we charge 30% interest APR in Colombia in this business. I said, that's crazy. I said, you got to understand that a big proportion don't pay us back. They just disappear, that there's a lot of fraud.
So they translate the risk into the cost.
Exactly. They don't translate the risk. They look at what they own, that they pay 1.5% for their house loan in Sweden, where there's zero risk. And if you don't pay, they take your house.
Yes.
That I would say is actually quite, an aggressive strategy. While charging 30% when you know that 4% don't ever pay you back, you just don't see the money, there's fraud, there's all these things, and it's small amounts. You got to understand also that many times in this you're looking at everything between $5,000 all the way down, depending on what type of loan, to $100 loan. You go and do a pawn loan in Mexico, you are going to lend somebody on average $120. Yes. How do you administrate that physically, if you don't have a good digital tool and you need to store the item at the back and for $120? For banks, that isn't worth the trouble.
So let's create an image here. Okay, so how for many of us who are watching right now, for them to be able to understand a little bit with an image. Let's say, so there is this man or this woman in Mexico. They historically they might have a bank account, but they don't have They don't use any service other than keeping some money there. They eventually identify that there is an opportunity of a new fintech in which they have on their mobiles, or they can go to a physical place, and they require perhaps to pay for rent or to pay for something else, $100, $200, and initiate the process to get this money.
So first of all, they might have an account. They don't use it to keep money there because the people, again, they live day to day. So
yes,
they might get paid into the account, but the money is gone the next, the average balance is zero or even a little bit below.
Yes.
The banks make huge amount of fees. There is a big distrust between the that consumer that you're describing and the banking system. They don't trust. They don't want the money on the account. I rather keep it under my pillow. It's safer there. It's that kind of approach. If I have any money, usually, at the best, I have 5 days buffered. I have enough.
And you've seen that in Mexico and Colombia.
I've seen that in Mexico, Colombia, and Brazil. It is significantly more common. I mean, you can look at the statistics,
yes.
But when you're out there and speaking to these people, you understand that something goes wrong. The radiator breaks on their very, very old car. They're in trouble. They can't get to work. The guy that's going to fix it wants $150 cash to fix it. They don't have that. They have $30 under their pillow. They can either then go to a pawn shop or a lender. If they go to the bank, I mean, you and I, if we go to the bank and want to borrow, it'll take 2 weeks. This guy needs the money now because he needs to fix the car in 2 hours so he can get to work tomorrow. Or if he doesn't get to work tomorrow, he doesn't get paid the day after. And then he doesn't, and then he has to sell the car and, suddenly there's a downward spiral. So they're extremely vulnerable.
So then there are several services in which he access to that. He already has an account, etc., on that particular service provided. And then by some clicks, by some answers, he can have immediately that money.
Because he has shared data with the provider saying, well, I know that, let's say, Thiago, every day he gets $14 into his account. And it's been going on like that for 18 months now. If I have that information and I can see where you're spending that money and where you're moving, etc., I can say, well, I'm going to fork up this 150 and we're going to deduct $1 for 170 days from your account.
Yeah.
And because I can see that, you can afford that. It's about affordability.
Yes.
So a lot of it is about that. Traditionally, how would I know that if you didn't have it digital? I wouldn't. Well, I could look in your bank account, but you're talking about so small transaction that it's not interesting with old, big, heavy infrastructure as the banks have today.
Yeah.
For somebody who's digital, light and nimble in terms of their organization, it's got good data. They know you in terms of how you use your money. They can see that.
And that usually builds up to a credit history of the customer, for example, in which you can eventually make bigger loans.
It does. I mean, in Colombia, my biggest challenge in Colombia when I was working there was actually the fact that I had customers that I gave a credit history and they left for banks. I wasn't working for a bank. I was working for somebody that actually brought the customer into the financial system. Most of my customers never had a credit. So if you give a customer that never had a credit, a responsible, good service, you respect the customer, you charge them what's fair, they love you. They're going to stick with you. But eventually the banks will get hold of them. He's been with me now for 12, 14 months. He's paying regularly. Suddenly he shows up in the credit bureau where he's never showed up and he hasn't missed the payment. The banks are going to go and say, or other people higher up the financial service ladder are going to go and say, hey, I'm going to borrow money to Thiago now at a cheaper rate.
Yeah, but although that can be negative for that particular company, it's what contributes to the integration and the inclusion within the financial sector, ending up supporting a lot the economy of that particular
because
place.
there's a difference between getting somebody into the financial system that has never been a part of it, or somebody that's used and abused of it. You know, there's a segment here in the US, unfortunately, which have had car loans, credit card loans, etc., and now they have nowhere else to go but to the payday.
Yeah.
And they just get stuck there because they come down from they had a credit score, they were in this space, and something happened, or they just weren't responsible enough. I mean, there's a lot of personal choices here. There's some people who can't pay. There's some people who choose and say, hey, you know, I've got 5 bills, you're number 5, Thiago, I'm just not going to pay. You know, then they come down. In Latin America, you know, a large proportion never had a loan. You know?
Yes.
And that is, you know, from a personal perspective, and most people I meet out there, that's who you want to work with. If you can figure that one out, that's going to be the real, you know, the numbers that you see in, you know, the World Bank and IMF and so on. Yeah, there's progress made on the financial inclusion in Latin America, but it's the region, one of the 2 regions in the world that's lagging behind. You know, the Asia's, parts of Asia's, you know, financial inclusion is very quickly ramping up, and that's where a huge opportunity is here for.
And this is fascinating. Well, my friend, we are approaching the end. I'm sure that this conversation, we could go on for hours. I'm very curious to see some of the questions that I'm going to receive later. And even with you in Austin or anywhere in the world when you travel a lot, I think it is worth for us to revisit this topic, bring back the discussion, and continue this chat, because I think you have some amazing experience, and I think it would be great for...
Thank you for having me. Always a pleasure, and I'm always available.
Fantastic.
Thank you.
Bom, amigos, vamos ficando por aqui. Muito obrigado pela participação no episódio de hoje. Deixem suas perguntas, comentários. Acho que esse é um tema que vale muito a pena visitar, ler e entender como que isso pode revolucionar o acesso bancário na nossa região. Muito obrigado e um abraço a todos.